Hey all, welcome back to Fully Invested Fi. Today we're gonna have a meaty video here because I'll have to do double duties as far as providing a monthly update to recap all of September, like dividends, performance, and then also kind of recap how we're tracking against the goals, intermediary goals that I've set for myself, and also just go over the quick weekly performance from this week as well too, from dividends coming in and how the performance is done. So yeah, I might be jumping around a lot, so bear with me here. I think it's the first time doing a meatier one across weekly and monthly, so we'll see how this goes, and we'll definitely adjust going forward. But yeah, let's dive right in. And also, just as a quick note too, I did get a lot of the feedback about audio, so hopefully today is actually better. I just realized that I was actually quite a bit of dBs lower than I should be at. To be in the proper ranges. So that's adjusted. Let me know how that is in the comments. And yeah, let's just dive right in. So as usual, for anyone that's new to the channel or for anyone that needs a refresher, let's just go over this handy chart here. So this is kind of the monthly flow that I use to, that's unique for this channel really, where I fully live out of my Robinhood brokerage account and I invest 100% of my paycheck. So how that works practically is that my paycheck comes in through Robinhood spending. I transfer that full amount, 10.8K, to my Robinhood brokerage, and that splits into two major buckets. $4,000 goes to growth and dividend growth stocks, which provides the capital appreciation in my account that drips on itself. And then there's also the high yield income bucket, which gets 6.8K, and that invests in 50 to 60% blended yield funds between XPAY, YMAX, ULTY, things like that. And that provides the income for the portfolio. And then that's providing a snowballing monthly dividend that's growing every month, and that deposits directly to the account, pays down margin. And yeah, so it's basically the two facets of portfolio, one that's providing capital appreciation and one that's providing the income. So two-prong approach there. And the idea behind that is that I actually never sell any assets to practically take out of money of the brokerage, right? The idea there, and like minus having to rebalance and things like that within the portfolio. But the idea is to borrow against those assets on margin at a 5% interest rate, which is cheaper than my mortgage. And that's what I use to pay any expenses that I have every month. So currently, obviously, my monthly dividends aren't quite covering that. So right now, like, I'm basically just taking out the difference. So if my monthly expenses are $9,000, I get 5K of dividends that month. So basically, I'm only really taking out $4,000 of margin. And that will vary from month to month as far as my expenses, but like on average, it's around 9,000 to 10,000. And I pay my monthly bills like that. And really, I'm hopefully going to rinse and repeat that until 40 years old. And that will hopefully help me reach FI much faster than my previous goal of 45 with my old growth strategy. So yeah, as usual, just a quick disclaimer, none of this is financial advice. This is really all just for entertainment purposes only. It's really just for you to follow along and see how I do with the strategy. So yeah, if you are to do any kind of this stuff, you got to do your own research. It's a very high risk strategy that I'm running given the margins. So yeah, proceed with caution. But yeah, let's dive in. So first things first, we can kind of look at the numbers as they are now. So yeah, we had like a good month in September. So if we go over the performance over the last month, really it was up a whopping 9.82%. So up $12,500. So if we compare that to VU over the same period, VU was up 3.82%. So yeah, beat it by nearly 3 times, which is amazing. So yeah, like I'd kind of expect, at least if given the margin, that the portfolio might grow like maybe 2x, but 3x is pretty amazing. So like, yeah, I think like some of the growth stocks that I have going like definitely had like a good month, like things like HOOY and things like that. Like for example, even just in the last week, and this is not factoring to September, but like yeah, like HOOY, for example, was up let's go the last 5 days here. Like, for example, this week was up 20%. MSTY was up quite a bit this week too. So Bitcoin had a bit of an upswing. So yeah, just interesting to see what goes up and down between all that. So yeah, that was the performance for the month there. So did really well. As far as the overall number, obviously over here at 140K. I still have 34.2K of margin buying power. I could borrow up to 167K, which I'm not, but I'm currently at 132K of margin and roughly 17K of cash that I can withdraw from, and still have like a steady margin buffer of over 50% at 78.7K, which is nice. Ideally, I think I want to try to keep this above 50 in general. Yeah, and then like if we pop over to my investment sheet here, so you'll see similar numbers here, maybe with a little bit of variance, but pretty close. Yeah, at the end of the day, I have 148K of my overall 200. So the market value of my portfolio, if you add all these assets up, right, comes out to 272.8K. And then after you factor out margin, the net value is 140K. So 148K of that is in growth stocks, like all these over here, right? So more than half my portfolio. And then 124K is my income funds. So all these guys here, right? So yeah, you can kind of see how that splits up, right? So it's like 54% roughly for my growth and 45% for my income. And yeah, so that's where we're at as far as the month-end numbers there. As far as the dividends in September, if we pop over to Snowball. So yeah, it was a good month. You can kind of see like the progress of the dividends over the last few months since I started the strategy properly in May. Started at 4.1K and steadily taking it up. 4.8 in June, 4.4 in July, 5.7 in August because of the 5-week period, five week payouts, and then 4.6. So steadily going up from when I started, which is nice to see. Definitely fluctuating, but overall trending up. Yeah, as far as dividends that I received that month, so overall 4.6K or 4,621. So yeah, you can kind of see like on the first week got like $314 worth of between ULTY and YMAX, 2.1K's worth between NVDY, ULTY, YMAX, Microsoft, and XPAY. And Microsoft, to note here, this is an example of what would drip, given it's on the growth side of my portfolio, and all these would deposit to my account instead. Yeah, 500 on the third week between HOOY, ULTY, and YMAX, and a little one from Google, first one from Google. And on the last week of September, last week's video, yeah, got some from BTCI, MSTY, QQQM, ULTY, YMAX for 1.27K. And the last payment that I had that wasn't on video from last week was a nice big one from SCHD, because SCHD is actually a pretty big part of my growth / dividend growth side. Yeah, that was like one of my OGs really that I've been investing in since 2021 really. So I've been building up that position. So that's why I do have a lot of growth, but also just counterbalanced by things like SCHD, which is a value play and a lot more stable and does better in downturns and whatnot. So that's a portfolio stays relatively well balanced because of that. So it's not all just risky growth, right? And if we pop back over, so that's September really. So overall, like I said, a good month that I was happy with. Like you can kind of see from where I started, 4.1K to 4.6. So interesting to see that like the monthly income is definitely not going up as fast as I'm projecting, and like I might have to adjust my projections a little bit based on that. But we'll kind of go at what I had before, just to kind of see how I'm tracking against stuff, and I'll have to see whether I recalculate things a bit. But still good to see. And yeah, sometimes there'll be like outlier months here that help push those averages up, right? But yeah, that was September, really. As far as the goals, so if we pop back over here, I have them updated over here. So yeah, given that just the stuff has fluctuated. So what I did is basically I just went from like the snapshot of what Snowball had it at basically the end of September. So they were estimating like 4.6 based on the payouts at the time. I'll have to think of like, maybe I can use a better number for that overall. Maybe like an average of like these, basically. I kind of did a rough calculation of these, and that would actually put me at like 4.7K if I averaged out all these numbers. Maybe I could actually maybe even do a median of that. But yeah, for now, for this first one, I'm just going with that, 4.6K. Because like if I average this out, this would have been 4.7. I didn't actually calculate the median, but yeah, we'll just roll with that. But as far as that, like compared to what you saw when you last saw this in the monthly process video, yeah, so it's slightly set back there. Having my full extra paycheck covered fell back a little bit. Originally we're estimating this month, and now that would be potentially January 2026. 85% of the way there. My monthly expenses are about 50% covered, so then 9,000 extrapolated over a year, and that's looking towards February 2027. My net monthly salary is 42% covered and is estimated for August 2027. My gross salary, so yeah, my full, like, let me see here. It's 14.9K over here. That's the target. Yeah, that's 30% of the way there, and it should hopefully be March 2028. Margin paid off is looking closer to like when I'm 40 for June 2030. So this got delayed by a couple of years. And full FI, so what I'm aiming for is like 2 times my gross salary covered, just to be safe given like the fluctuation of the dividends. This is looking 15% of the way there at 55K over 358K. So that's looking like April 2023. So definitely like a couple years after my hope of hitting 5 by 40. So we'll see what we'll have to do over the years to potentially speed this up. Like maybe once like the margin is paid off, or maybe even if I'm like, I don't know, once I reach like 75, 80% equity, where I basically maybe don't pay off margin and then just start funneling a lot of that extra money towards pushing more high yield stuff, knowing that I want to hit 40 SPY, right? So we'll have to see. And then also one thing that I'm not like covering in like my projections is that I'm just kind of counting my base salary, but like I do have an annual bonus that comes every year. And actually this month is actually 1 month where I'm going to get that in October. So yeah, that's going to be like, I think roughly 15, 16K that I'll get cash on top of my salary. So that will help boost things a bit. And I'll have to decide whether I put that all in high yield or just split it 40%, 60% as usual. So we'll see once I get to that at the end of the month. And yeah, that should help boost things up and yeah, kind of help push up numbers as needed. But yeah, we'll see how that goes. Like, and how I kind of got these numbers and the tracking is just this tracking sheet here. So I have like the projection sheet. So this is just kind of like the raw projections just to kind of see where we're at. But then I'm also putting the actual values as the months come up. So these are the 3 that are done so far since I started the sheet. If we kind of like check against like where we're at and where we're projecting, yeah, it's kind of nice to see actually that like I was actually not too far off actually so September was pretty close. It was like 253K as far as market value, for example. But then actually I ended up ahead in September by 6K, which is nice. So yeah, you can kind of see how things have changed there. So I'm not as far out for equity as I had estimated. Margin debt is ticking a little bit higher. Like I said, September and October and whatnot is going to be high because of the Japan trip expenses coming on. So margin is kind of ticking on a bit higher. And obviously the monthly dividends isn't quite hitting that same level there. So we'll have to monitor that and see how it does over time. So yeah, and so that's where I'm getting these numbers there as far as like the monthly dividend and how that's tracking. And yeah, I'm basically just shifting these as I'm going to, once I check in once a month, right, on this sheet. So yeah, you kind of see how this matches exactly what I was saying on the Miro sheet there. But yeah, that's where I'm kind of getting the rough dates and things like that. So, gross monthly paycheck cover. I think I didn't update that. So that would be November 2028. Yeah. So I actually forgot to update this properly. But yeah, that's the sheet there. But one thing that's encouraging to see though, and that still keeps me motivated with strategy, is that like if I pop over to year 5 when I'm 40, and if I can compare that to my old growth and dividend growth strategy, like how it's tracking with that strategy was to be landing anywhere between 624 and 716K. So given like that I'm like investing my full paycheck and yeah, just pushing a lot more capital, like yeah, you can kind of see here that like potentially at 40, I might be at 1.1 million. So that's, yeah, just kind of accelerating the growth a lot more given how much more capital I'm putting in versus this. Because in this strategy, I was basically assuming that I was putting in 3K a month previously before I switched to this new strategy here. So yeah, and this was assuming like 12% capital appreciation, dividend growth, current yield at the time, things like that. And then my original plan for that was to basically reach 45 at like 1.4, 1.7, and then sell and reinvest into like high yield dividends at the time, JEP-E, JEP-Q, and things like that. Or the equivalent now would be SPY-I, QQQI, to get above like between 10 and 15%. So yeah, that was the plan there. But yeah, obviously I've shifted that because I want to try to hit 40 FI. So yeah, we'll see how that goes. But yeah, gonna keep tracking this and keep updating the actuals. But yeah, as far as another tracking thing that I've been doing is just over here. So kind of going back to when I started this strategy at the end of May, just to see like how those different values I was talking about in the last video, as far as how those are evolving, margin buying power, buffer, monthly dividend, and things like that, equity. So yeah, you can kind of really see the power of the strategy here in play, right? So when I started in May, the market value of my portfolio was 205.8K. And then at the end of September, now it's 271.1K. So that's like a lot of growth, right? So obviously like some of that is like just the money I'm putting in for my paycheck, right? But that's still like 65.3K of growth, which is amazing in market value. So really 10.8K of that is like yeah, June, July, August, September. So 4 months worth of salary. So 43.2K. So really 22.1K of growth. So that's pretty amazing. So you can kind of really see the compounding effect really happening because, like, yeah, this is the money that's compounding at the end of the day, right? So yeah, you can kind of really see that growing nicely. The equity is not growing as much, obviously, but because of the margin that I'm taking out. But yeah, it's just nice to see the engine in the background revving, right? So my margin equity is slowly going down there. Started 55%. Now I'm down to 50.82. Available for withdrawal is steadily ticking down because of like my monthly expenses are outpacing my monthly dividends, but hopefully that's gradually gonna balance out. So just gonna keep an eye on this. And then also, like I said, keep in mind that like my big annual bonus is coming in, so that's gonna help replenish this quite a bit. So I should have a big one by the end of October. And you can kind of see my margin buying power started at 62K, down to 33.2. My full margin buffer started at 21% because this is back when I was in Fidelity. And this is actually is steadily going up, which is nice to see. So like I started at 23 when I switched to Robinhood, but that's actually steady ticking up with all my deposits. So I'm at 25.46. So this is like the real drawdown that would have to happen for my portfolio to hit a margin call. So basically, because this is 25% down from this market value. If we go off the net value, that this portfolio has to go down 50%. So, but realistically, if the full portfolio goes down 25%, that's the equivalent of 50%, given the amplification of the margin, right? So that's why this can be dangerous too when you're going down. So this helps you on the way up, but that also can hurt you on the way down. So yeah, keeping track of the buffer there. So the whole net buffer as well has gone up quite a bit between Fidelity and Robinhood. And then obviously here you can kind of see the buffer like going up quite a bit. So now I'm at 68.7K of buffer. My margin has went from like 88K to 133 over the last 5 months. And yeah, my monthly dividend. So these are the actual dividends from that month. So just tracking there to kind of see how that's going. And yeah, I guess I missed, Snowball must have missed a dividend payment there. So yeah, this was actually 4.6K back in May. So yeah, that's how it's tracking. So I'll just keep updating this as well as part of just like another tracking metric. And just kind of nice to see those numbers. Like when I put this all together, this was kind of really nice to see this nice steady progress of the market value. So yeah, that's for the month. So this was a good chunk of the video just doing the month. So yeah, we'll maybe try to breeze past the weekly stuff a bit quicker. And yeah, and also one thing to note too, see how this margin buffer has increased quite a bit. One big reason of that is because of this blended margin maintenance ratio. So when I was at Fidelity, like if you added up all the margin maintenance of my positions, which is these, a lot of them were like 30%, 40%, or even 50%. So but on Robinhood, I get a much more favorable margin maintenance rate. Everything is practically 25%, except for MSTY, which is at 35. So this averages out to 25.37% blended rate, and I was getting 32%. So really what happens is that, yeah, that just gives me a lot more margin buffer here. So yeah, my portfolio would have to fall 70.70K for a margin call to be hit, which is quite a bit. But yeah, that's for the month as far as the recap. So next up, we'll just kind of talk quickly about the week. Yeah, this week was a really good week in the market for me. It was up 4.27% and then was up 5.7K compared to VOO was up 1.34%. So yeah, more than doubled VOO again here. Yeah, again, like this was led by an amazing week from HOOY in particular, went up like 20% in the last 5 days, which is crazy. Bitcoin had a good jump up, so that helped both. BTCI wasn't available in Qualtrim here, but I just put BITO as a proxy. MSTY had a good jump as well, and NVDY had a little bit of a jump this week as well too. So yeah, good week overall. Reddit suffered a bit, but yeah, I have a pretty small position in that as far as that goes. Yeah, just $1,000. So and that was up quite a bit from its crazy gains from a couple weeks ago. So yeah, that was the week really. As far as dividends that happened this week, just a small week. We had VOO that came in on the 1st. That's on drip on itself, so 1.14% of that. ULTY came in at 86.79%, which is nice, so $259, and then $218 from YMAX, which popped back up to 56% from its like little low from in the 30s last week. So yeah, nice little week here. Looking forward to the month. Looks like I might be making up to 5.1K, maybe a bit more as I invest more into like ULTY and things like that during the month. But XPAY, yeah, it's gonna have a nice big week next week. And yeah, we'll see how that goes for the rest of the month. And like as I mentioned too, I have my bonus coming on this last paycheck over here, so that'll be like a big bump for next month. And we'll see how we invest that. And if we check in for the full portfolio growth and stuff like that, yeah. So yeah, roughly matching what we saw in Robinhood, 3.67% on 7 days, up 5.7% on 1 month, 7.5K, up 8.9% over the S&P, 11.4K over 3 months, 6 months up 28%, 30.7K, and year to date beating it by 13.4%, so 16.6K. So holding up pretty well overall. I know it was dicey in certain parts of September, but yeah, like I come down hard, but it seems like I push up hard quite a bit too, so which is nice to see. So yeah, and then one thing that I mentioned last week that I'm still kind of thinking about as far as the rebalancing between some of the single stock exposure that I have in the high yield side of the portfolio. So things like NVDY, MSTY and stuff like that. I'm potentially reevaluating it. I was kind of like running through the paces, even just with like ChatGPT a little bit, going over NVIDIA's annualized yield, for example, like year to date. So this kind of rough, I still need to double check all of these, but kind of roughly matches from what I remember from like some of the bigger ones that NVIDIA had over this last year. But yeah, it seems like all of its payments year to date have averaged out to 68%, and then also like a median of like 57%. So yeah, if I compare it to ULTY, which actually has stayed like pretty steady, like in the 85% range, it's a lot more consistent, right? So you can kind of see it in this chart that it kind of put together here. Yeah, you can kind of see the peaks, and so some high peaks, but also some kind of like low lows here in like the 30s, 40s. So ULTY has stayed like relatively stable, and I just factored it in from like when it went weekly essentially. So back in March. Yeah, it's still thinking about it. I'll definitely get the NVIDIA payment next week, and then I'll maybe reevaluate, because right now I'm like quite a bit in the green in NVIDIA when I look at it, right? In total return, I'm actually up like nearly 20%. Down with unrealized gains, 7K, but if you factor in all the dividends I've received in it, I've received like 14.3K over the last year, because I started investing in NVIDIA like exactly this time last year. So up 7K all in, right? So yeah, like if I take this money out, this is like roughly what I put in there. So yeah, I'll have to think about it, because yeah, imagine this big chunk of change going into ULTY. So yeah, that would boost up my income quite a bit. So yeah, we'll see. I'll have to run maybe more projections and just kind of maybe see how my monthly dividend would fluctuate, right? So like even potentially, like I could, like for example, if I wanted to do this quick. So let's say I take 27,000 divided by ULTY's like current price here, 5.47. So that's like 4,900 shares, quite a bit. Like if we modeled it out, for example, like how I might do this is like I just kind of zero this out, do 4,900 shares. So that would change my monthly income quite a bit. So yeah, you can kind of see here how like this jump from, I think it was like 5.4 to 6,000. So yeah, we'll see, because like ULTY's like my current yield on cost is 85%. NVIDIA, like this is the median. This is actually 46 if I do year to date. So yeah, we'll see. I'm gonna back this out, but yeah, that's how I can kind of project stuff a little bit when I play with my sheet, which is nice. But yeah, we'll see. I need to still sleep on that a little bit more and think about it. But yeah, we'll see once I get my next NVIDIA dividend next week. So yeah, the goal with that really would be to like, yeah, make the payments a little bit consistent more month to month, because like, yeah, these big swings are quite a bit, and that's what's kind of throwing off a lot of the projections. So, and seeing how consistent ULTY has been so far, obviously that could change too, but yeah, well, we will see how that goes. Yeah, as far as that, you might have also noticed that my puts aren't here anymore. I sold those. I didn't end up rolling it today just because I wanted to just manage it a little bit differently. So might rebuy the puts on Monday and kind of see how that goes. But also, yeah, that's one thing I'm maybe also rethinking, given that like just overall the market is generally more green than it is red, at least in the US market. So I'm kind of wondering whether I should do that or not, keep doing it or not, because I'm kind of bleeding $300, $400 a month on that. But it is insurance, so we'll see. But yeah, maybe I run this until the end of the year and see how I feel and reevaluate next year. But yeah, I'll likely just buy in again on Monday, but just handle it differently, because now I had like 4 different options positions, but I think in Robinhood you can actually combine them to make it a little bit neater to manage. So we'll do that. And yeah, just as I did last week, wanted to do a little finance video of the week. So one new channel that I found this week was actually Velocity Portfolio that got served to me on my YouTube homepage. So yeah, this was cool to see someone else doing another. He just kind of recently transitioned to fully living out of his brokerage and kind of starting to fully invest his paycheck. This is like week 1 really of doing it. So yeah, definitely check it out. It's interesting because yeah, just different approach to what I'm doing. Just similar way where he's investing his full paycheck, but he's leveraging options and also high yield rather than growth like on my side. So yeah, just interesting to see how people approach it from a different way, like similar strategy, but similar goal where he wants to hit FI earlier. So yeah, a lot of different people you can kind of follow. And also like to note too, as I follow new channels and stuff too, and find other channels that are where people are fully living out of their brokerage, if you pop over to my channel main page, you'll see the trailer that I have there. But also towards the bottom, so there's quite a bit of finance YouTubers that I recommend that have been like really instrumental to me and learning about finance over the last like 4 or 5 years. So I kind of throw them in there. So a lot of great people to check out there. But also, as I'm finding other YouTubers that are living out of their brokerage, similar to what I'm doing, or potentially also like investing their full paycheck, I'll throw them in here. So yeah, this will be kind of like a live list. So you can see Paycheck Portfolio, which was like a big influence on me. Eugene Vasquez, obviously, as I mentioned last week. And yeah, through Velocity Portfolio on there, I found our own build as well. And yeah, ULTY as well, who's started doing his full paycheck, but going a bit more aggressive with ULTY only. But yeah, good to see just different ways people are approaching things. 9-5 of Freedom's another great one, and Todd Conventional Wealth Ideas as well. So yeah, check that out if you're looking for other people living out of their brokerages like I am. And yeah, that's it. This video definitely went a bit long with all the stuff to cover. As usual, we'll just wrap it up by saying, like, yeah, you can follow me on Blossom Social. You can kind of see all my trades there, do all my posts as well. And yeah, and then also on Snowball Analytics, like I said, like there's a free link that you can follow, and all those same stats that we were going over earlier, you'll have all that stuff, right? You'll see kind of like my pies here as far as how I split it between my anchor and anchor ETFs and my anchor stocks and my high yield stocks and the high yield anchors. See the full performance, all fully transparently there. So yeah, like I said, always love being transparent about all this stuff. So you get all those great numbers that you can come follow along for free. But yeah, that's the video. This one a bit long, but yeah, we'll see how I can adjust this in the future. This was definitely a meaty one. So yeah, with that, you want to keep following along for these portfolio updates and kind of see how I do with this whole crazy strategy. Like and subscribe, hit the bell notification if you're trying to get updates when a video comes out, and I'll catch you in the next one. Peace.